Good morning, ladies and gentlemen. Clueless Trading Frank. Here's a concise pre-market AM report for Thursday and the rest of the week going into Friday afternoon, September 22nd, 2016, the day after the Fed. Full disclosure, this is purely for financial education and not for any solicitation or advice. Let me get barrel through a couple of charts, which I've been posting on a very systematic and diligent and timely basis on @Clueless8RT, the real-time Twitter feed. New members and free trial subscribers who are listening to this for the first time, feel free to review multiple a large number of, and especially the recent ones, videocasts on the Clueless Trading YouTube channel, so you get a sense of precision forecasting and predictive analytics. Quick behavioral comment, which I specialize in, as you know, as one of my passions, which is I call behavioral game theory, known as behavioral finance. The reality of the trading business and the investing business is everybody, and it doesn't matter whether they'd like to believe, accept it or not, everybody has a major problem. That includes me. Maybe I have a lesser problem because I work at it every single day. I chip away at it. But the biggest deficiency traders and investors have is they're always looking for certainty. They're looking for a level of comfort that never comes. They're looking for a level of comfort to buy something. Selling, hey, you look at your P&L, you're green, you sell, right? And then you see it go up another 30, 40, 50%. In the case of options, maybe another 100%. The bottom line is there are no perfect moments. The only way that markets, well, first of all, look at what happened yesterday. We had a massive Fed meeting. The markets were dilly-dallying around within levels that I posted on a clear basis for weeks, if not for days, if not the same morning. What you're looking behind you is a chart of the S&P 500 that I've been showing for a long time, but most importantly, showing since the big capitulative drop on Friday, approximately a week ago. Actually, 2 weeks ago. Wow, time flies, right? And I kept on showing the probabilities of what might happen on the upside and the downside, saying that the bias is mostly to the upside, given the fact that I'm looking at some basic internals, and I'm looking at a lot of advanced and complex internals that I don't always share, because it's, like I said, start with the basics, then move on to the complex ones. Want to understand some of the more complex ones, you got to get into the advanced coaching sessions. So this is what happens with the market. Real simple. We all know that, okay? The algos and the high frequency trading black boxes never, ever want the maximum amount of people. Let's put it this way. They want the least amount of traders and investors on board before they make a large move. That large move yesterday, for example, was on the upside. It's the same thing with the downside. They want the least amount of people before they're going to drop the market. Now, is there a cabal of algo HFT firms which dominate the market? No, I don't think so. But there are some which are much better than others. Like George Orwell said, all animals are created equal. Some are more equal than others. Just the way in life. Everyone's smart. Some people are smarter than others. Just the way it is. But it doesn't stop us from striving towards getting there. So how do we get there? The way you get there, if the markets are not really putting a big banner up saying buy me, right? The markets are not putting a huge banner saying buy me or sell me for that matter. Okay? So what do? Well, the best way to do it, as I've found over the years, and this is what I share with all my members and free trial subscribers, and I try to imbue and share that knowledge and teach and coax and motivate and boot camp and everything, is that you have to study the complexities of internals. Everybody's looking at prices. So if prices could tell us where something's going to go right away, then why not just rely on price? It doesn't always work like that, because a lot of the times, Tesla, for example, chart's looking fantastic. Boom, comes out that Apple might want to buy McLaren. What does McLaren have to do with Tesla if you really think about it? Nothing. Maybe there were rumors that Apple might buy Tesla. Yeah, I know there's been floating around, which is ridiculous to me. The bottom line is that there's always noise and unexpected events that's going to happen. Okay, shrapnel flying around, which are going to hit individual stocks. But then if you looked at the internals very carefully and you saw some really deep oversold conditions, you want to buy at that level. And that's exactly what happened. What happened with the next half hour? The stock went positive. Profitable for the day because you dollar cost averaged. You have to dollar cost average, in my opinion. Do what you need to do. Okay. On options. You cannot just get in and say, okay, that's what the lowest price I got in. I'm going to make money from that. It doesn't work like that. Bottom line is with behavior game theory is that there is a huge amount of fear in the markets. The media portrays it, and it just seeps into everyone. Majority of people are still scared or bearish in the market. Like I used to say, and I'm still saying this: bulls are scared, bears are terrified, and the market goes on. So as tactical traders, we try to read in between the tea leaves, share that with people, and let them decide what they need to do. Saying all that, let's take a good look at this precision forecast that was done weeks ago. So this is what I'm seeing happening here, okay? So let me get the pen. And so you have a rounded, and this is the simplest way you look at things. Here's Brexit. So you have the rounded stochastics. It's starting to curl up. It doesn't mean it's not going to flounder around. It might even create a double bottom here, for all I know. But I did say that the 34 and the 50 magnet would be where the market wants to go. And I think that's where the market wants to go. It's going to be somewhere between 2170 and 2175. That's my opinion. The upper gap fill is here, somewhere around 2177. There's a gap here, which I kept on showing, right? So we are getting towards a lower gap fill, which intersects with the 50 and the 34-day moving average. So plain and simple, manage your trades accordingly. If the market gets there, the market's going to basically, in my opinion, hit a major resistance. Now, this is turning out to be a cup. Is it possible that it creates a handle, drops another 100 points or so before it makes a big move towards hitting the testing the all-time highs, which is very likely at this point, given what we see. Things can change, but given what we see, that is what's shaping up to be by the end of September. A retest of the ATH all-time highs, which is close to that 2200 range. Okay, so I said this was going to be the follow-through day. The follow-through day did come correct. Binary consolidation, and then the hesitation before the Fed, which I walked through. Yesterday was a fantastic day, bar none. Alerted every single member what needs to be done. Look, I'm not a trading god. I'm just a fast learner. I love what I do. And only a way that I'm smarter than most people out there when it comes to analyzing and understanding macro finance, global economics, central bank policy, and stuff like that, because I love doing that. It's like some people love analyzing every single player, the scores, the batting averages, and the statistic. Well, I like doing it with economics and finance. Okay, how about that? So saying all that, there are much better traders than me when it comes to actual semantics of trading. But when it comes to predictive forecasting, this is the best service you'll ever land up in. No question about it. And I've shown that repeatedly. So saying all that, this is your first stop. If we break above that, then the next stop is going to be at that 2178 level. This, once it gets overbought up here, don't mess around. The market will correct. Now, if we get a pullback today, there's no telling. It could very well happen. Then you're looking at somewhere around the 2156. What's this range here? Yeah, around 2153 or so. That we could come down and test. Anything below 2140, all bets are off. This market's coming down, testing 2114, and that's another day story. So saying all that, this could be a scenario. This could be a scenario, believe it or not. The other scenario is we get up here, test this 34 and the 50, blast through it, get up to the upper gap right here at 2177, 2180, and at that point have a correction. Or the market could very well decide that just on this move alone, it wants to go back and recapture. With the speed and the ferocity of and aggression of the algo HFT programs at work, it is very possible that these things happen very quickly within a matter of days, if not within a matter of hours in some case, these consolidative moves. Okay, but so far that's positive, and we'll see what happens. Let's take a quick look at the Andrews pitchfork. This is the low of that big crash. All right, we played it beautifully, not perfectly, but beautifully. Perfection is a myth. If somebody says, "Oh, I bought down here and I sold up here," they're absolutely lying. As long as you get the majority of the move, that's the best. That's awesome. You'll go way ahead. Don't let your emotions get in the way. All right. Try to be solid. Let the markets will throw a lot of curveballs. That's life, but you got to deal with it. Stop complaining. Stop making excuses. These are all things I tell myself. All right. So I'm sharing it with you. And just do it. Take a small position if you need to. Or actually take multiple, you can take multiple moderate to small positions. You don't need to lump into one thinking, okay, this one's it. And then when that one is not it, you're sitting there on a pile of you know what. So, you know what? Just simple, commonsensical things to do. So do what you need to do. At the same time, when you see large runaway candles, you have to jump in. You can't be waiting, oh, I'm waiting for a dip. That's like some of the worst words coming out of a trader's mouth in the midst of a massive move on the candles. Look at what happened after the Fed. This is your downtrend line. Beautifully, it tested the downtrend line. Okay. Stochastics remained high. Beautifully tested. I repeat, the downtrend line took off like a rocket. This move alone was good for 100 to 150% on the SPX RUT calls. And to buy at lows was alerted. And I did say you got to cost average down. We also did a minor short. I managed to get out of the bulk of them for a decent profit. And the remainder small portion went to zero. Those are the SPX puts. They went from 6 to 0. The other portion managed to get out at 8, 8.5, around that level from the average cost of 6. So I left that one alone just in case. But the fact that the majority of the positions were long, that small hedge was exciting as it was falling because I knew the rest of my long stuff was rising rapidly. The faster this SPX call dropped from 6 to 0, and okay, look, I could have sold it at 1, I could have sold it at 2, it doesn't matter. Okay, the faster it moved down, the majority of my long positions I knew were equally, if not exponentially moving faster. Get the logic? Simple, huh? So, saying all that, at this point, you got the upper Bollinger at around 2170, right there. If we enter the channel over 2171, you can clearly see what's going on here. So we could, if the Andrews pitchfork and these channels, these defined channels are correct, then we are getting to the upper end of the green zone. That's around 2178 or so. And this is the E-minis. So you're looking at, I'm sorry, this is SPX actually. And so 2180 or so. And then, of course, you have that. So I'm going to leave this chart alone. And again, you can zigzag around. We are overbought. We are overbought. But remember, the longer we stay the longer we stay okay, this is bear with me 1 second. This is annoying, and I do apologize for the interruption. So if I go here, and I go here, and futures are up 9.5 right now. This is a great, platform to use. It's free. That's your basic chart. And let me pull mine in. There we go. Okay, this I've been showing for a while now. So I'm moving on to another chart here. So what we're seeing here is you can see based on what's going on that we are most probably going to hit around 2177 on the E-minis, which is roughly around 2185 or so on the S&P SPX on a daily basis. on a daily basis. It's amazing how these lines all match. Now, let's take a look back at the SPX that I was showing. I do apologize for the interruption. And you can see what's going on here. It's a powerful move. We were in a trading band, 2146, 2122. We broke out of that at 2146. S&P. I explained all this stuff. This was it. This is also another. Let me get the. Okay. So here you have these volatility patterns. This was the range we were traveling in for a bit, and I did say this might happen for a whole bunch of days, kind of zigzagging around, and this is when we took off. So here is your breakout level. There's your breakout level. This is where we closed at last night or so, and then now we're here. So at this point, it is very possible that we get back. So as you can see here, we're simply back to where we were on the 11th of September. Believe it or not, we're simply back to where we were on the 11th of September. So saying all that, let's zoom out. So when we zoom out, we see a bigger picture. My opinion, high probability. Cannot give you the exact time frame. Maybe by Friday, maybe by tomorrow. I doubt if it's by tomorrow. But by next week or by the end of the month, we're going to get back to that 2190 level real fast. This pattern, in my opinion, this very large volatility pattern, okay, is going to get resolved. And then we see. In the meantime, there's going to be nice little pullbacks, consolidation channels, and stuff like that. I'm giving you the actual swing view. Bottom line is that I do my best, and I do a fantastic job. I will stand behind it, of doing predictive analytics, showing the internals, the slow stochastics turning, all kinds of good stuff. If I see a reversal hammer or an inverted hammer, which is negative, all kinds of stuff, I show that. It's up to you to take all that information, do what you need to do. Individual stocks that we've been showing are doing fantastically well. I don't need to even go into each one of them. Okay. And in the meantime, manage your own trades and do what you need to do. Looking at I want to show a picture of the RUT. Looks like nothing wants to cooperate today. Okay, let me go back to this. Type in IWM. This does not give you real time on the RUT, which a lot of exchanges don't do because it costs money. So that's why you're gonna, you do that on your own platform. Okay, I don't know what is going on. There you go. I like what I see happening on the RUT. Nothing new here. This is not the first time you're seeing this. I put out charts on the RUT, IWM several times. Scroll down the Twitter feed, go to the media section on your Twitter feed, and you on my Twitter feed, and you'll see all the charts there. We are working on the stage 2 development of the website where all the charts will be there. These things take a little bit of time, and I'm rushing on it as quickly as possible. So if I do this, I only have a minute and a half left. Nothing's cooperating right now. Okay, so looking at this chart here, plain and simple, you got a gap. You got a gap right there at 124. We're almost getting there. You're going to hit resistance there. Upper level is 125, which I've shown. So if it's a cup and handle formation, I only have a few seconds here, then it's going to go like this, move up here. You take your profits this morning, create the handle, and from that it should move higher. That's it for now. Thank you for listening. Let's engage in the real-time Twitter feed, on the chat room. Bring in your friends. Having a fantastic week. Thank you for listening.